Hey guys, so today is Tuesday and welcome to today's trade breakdown. So actually today, once again, a more difficult trading day, as you can see right here, because we had lots of SMTs with ES being in place. So NQ was kind of more the slower index, just staying behind. And also, if you take a look on the daily chart, we can see today was basically our contract switch, what we can see right here. So from March to June. And we also do have a really huge new day opening gap due to the volume, basically to the volatility with the contract switch probably. And now we are trading higher. We are definitely in bullish conditions, but also if we take a look on the hourly chart, we can see that we already rallied a lot before basically the opening. So within the London New York open kill zone window, we definitely rallied higher. So it's kind of a difficult bias, because in that case we are definitely in a market maker buy model, because we have this really clean shaped V shape. So that's basically your sell side curve and your buy side curve, and our objective is basically right here at the external liquidity. Therefore it's really difficult to trade not to trade but to form a bias, because we are definitely bullish on the higher time frame, but we are already really overextended. You can see the midnight opening price down here, and also with the aggressive rally right here before the opening, you can expect once again a more slower AM session, and therefore also a sorry pardon guys, a hourly retracement, because also right here we trade into the hourly rejection block, and from there on we have a huge wick to the downside, and then we can expect that this down close candle right here will expand, basically align with the direction of the wick right here, and that's what we got. Wick to the downside followed by a body. Now we are inside the high time frame bullish hourly gap right here, and I don't know what we will do, but for now I will not trade. So I will wait for tomorrow, basically. I don't know if we trade from here all the way up to those highs. We just see tomorrow. Still kind of a really clean market maker sell model followed by a market maker buy model. We like the structure basically on the hourly chart right here, but I will remove this right here, and let's drop to a 50-minute chart. So I don't have marked out basically today's new day opening gap, because there are so many. So because we're just stuck in this daily time frame, or in this daily price range, we have so many high time frame gaps, and it's really also difficult to keep a clear head in such many PD arrays. Really have to refer only to those who are important to us, but there are still there are still just too many. But actually really not really anything interesting in here. Also, what I really like is the fact that we traded back to the hourly rejection block we had basically yesterday, found support in it and traded higher. But with that we can already drop to a 1-minute chart. And before I show you my executions, I want to also show you regular trading hours. So what we got basically, so what we got right here is basically quite a clean regular trading hours chart, because we are really respecting the quadrant levels, and therefore we can frame a bias definitely also on regular trading hours. So today we have a new open range gap of 104 handles. In that case, because we are not in trending conditions, we want to see that we actually trade back to CE, also respect the upper quadrant, but definitely trade back to CE in that case, if we are not also in really the most bullish conditions. Actually we are, as you know, because we traded high before the opening, but what I'm referring to is if we are bullish in the AM session, and that case is not the case, because we are just too overextended, traded on the hourly chart into the rejection block, and therefore we can expect that we will have that we will see a retracement. And as you see right here, we are also clearly respecting the CE level right here from Thursday. So not on the 5-minute chart right here, but also right here with the wicks. But if you take a look on the 50-minute chart, it's really obvious. Also We close a bit above it, but we close still below the upper quadrant of Tuesday, which is also a huge new open range gap, and that's why it's really important to us. Also because you can see right here, we were definitely reacting to CE, so therefore we know that the gap right here is still important to us. And yeah, from there on we traded lower and traded back to CE. No, not not CE right here, but CE down here, and also the upper quadrant. So yeah, that's really clean to see. And with that we can go back to NQ, and was the wrong way, and go to electronic trading hours. So 1 minute chart right here. I ended up actually in the green today, but still took a lots of, once again, unnecessary losses in here, which kind of, so let's just talk through it. So actually today we opened right here and traded higher, and with that basically I already know, okay, we are still bullish. We have well, basically I have the hourly the daily buy sell liquidity in mind above here basically, and I don't want to trade against the trend in that case. So I just want to see that we have a sell sell liquidity sweep, eventually trade also back into a 5-minute fair gap, and from there I want to frame a bullish buys basically, so a long setup. In that case, the buy right here, I basically did two things wrong. So the first thing is that we have basically opened up 10 a.m. right here, and what you can see is that we still did not have a wick below the candle right here. And also with the fact that our hourly candle opened up, we still want to see, or could anticipate, that we will see one more move to the downside. Basically, it could have been that we traded lower, scrapped the sell liquidity right here, and from there on traded higher. And that's why we have to be a bit more patient. We have to wait for 10 a.m. basically, that we see our power of 3 on the hourly chart as well. In that case, yeah, kind of avoidable. And also the second thing I did wrong is that I traded already with 2 contracts. I basically forgot it, just had not 1 but 2, and in that case I want my first trade to be only 1 contract, because it's most of the time that I fail on the first trade. So quite interesting. But yeah, from then we traded lower, and after we basically took out the low right here, not only with a liquidity sweep, but also with the down close candle right here, and also with displacing through CE, I knew, okay, we are definitely not bullish. We are going to see a deeper retracement. I shorted right here. Wanted to see that we leave the gap right here open. We did, and traded lower. I took my first partial right here perfectly at the 9:30 opening price. Bit annoying. That's, maybe let's just put it right here. Put my first partial right here, and I think with that I was already up, or basically break even, and from there on just went break even and got stopped right here. Completely content with that. I mean, we also formed S&T, so we could have seen if NQ would have been like the leading index, that we would eventually even would have traded back to the sell liquidity down here. In that case, I'm completely content with the trade in here, because I like basically that we now formed also a really strong CSD in that case, with the aggressive displacement. Or let's put it to the swing low, so the down close candle, it's a bit more, it's a bit better. So, and from there on I knew, okay, we now created one small SMT, we had our retracement, and from there on I'm actually once again bullish. Why? Because to me, we now basically trade also into a discount. So if you take our ranges, we can see we trade below CE of our opening range, and from there on I'm still kind of also bullish, because we also, with the SMT, with ES, with sweeping the 930 low, we kind of have a market maker buy model being in play, because there are lots of stops below the 930 low. Still, it's not really a session liquidity sweep, which I really want to see for a market maker buy model. But in that case, sometimes if we are in bullish conditions and not really are too overextended, and we still want to see higher prices get met, then we sometimes are able to form a market maker buy model in here, and that would have been enough. Today, it's actually not quite the case, so I'm completely content with the entry right here. What I did wrong was that I added right here, and that was already the wrong case. So one contract right here, one contract right here. I mean, it's okay, but just enter with 2 and just leave your stop below the breakaway gap, and then just wait basically. Because I really got caught up. So mitigated one right here. It did not really like that we aggressively traded below the low right here. Added one more right here. I think I got stopped. Went short, got stopped. So and that's completely avoidable because actually we did nothing in here. Definitely we are with 1030. I already want that we trade higher if we are in bullish conditions. So that could have already, or that already tells you basically that we are not really in those bullish conditions that we want to be in, so low resistance conditions. And that's also due to the fact that if we take a look on the hourly chart, so at 10:30 we had already the 10 a.m. down close candle, hourly candle. So we are trading once again against the hourly chart, and that's why we just can't form any low resistance conditions to the upside, because we are trading against the higher time frame. And that's why basically also right here, still with the London close macro, it's not the case that we find basically speed to the upside, but still high resistance. And once again, to remind you, if we take a look on regular trading hours, you can see that we are really holding strong to the CE level right here from first day's new open range gap. So therefore, we could have also that's basically an indication that we are not able to trade lower, and I realized that basically with getting stopped. But trade by stop actually break even, so that's what I did really good in that case, because I knew, okay, if we are not able to expand higher within our long and close macro, if we are really getting closer and closer to the end of our macro and we are still not expanding higher, then I know, okay, there's something off, I'm probably offside, and therefore to trade my stop break even in here, it was perfectly done. Still completely avoidable those back and forth trades in here with a proper stop management, which is below the breakaway gap. I know that. Still, I don't like, or basically I know that if we are not able to trade higher from here, so retracing with such an aggressive retracement, I know that we are not bullish, because with 1030 we need to spool higher, and that's why I kept on also leaning basically towards the sell side, towards the market maker sell model, which is also the case why I went short. But in that case, we are not in the right time window to go short, and that's why we have to wait for the long and close macro. And that's right here is only basically a retracement. So therefore we have expansion, retracement, expansion, and basically not expansion, retracement, expansion. That's not the case, because we are respecting regular trading hours quadrants. We are already overextended, and therefore we will see also a retracement back to CE of our today's new open range gap. So that's really important to just keep in mind. And with that we can go back to electronic trading hours. So now let's talk about the short. I got stopped right here, as I explained before. Went short within basically the same candle. That's why you can see 2 arrows. Added right here 3 contracts. Once again, I'm quite good with anticipating the right expansion. So that's what also once again kept me, or how we call it, which allowed me today to be profitable on the day. I don't know, I wouldn't call it over leveraging, because I'm only adding one more contract, but I'm definitely over trading. So still I need to learn a lot. I need to wait for the right time, and I need way better stop management. Still, to be fair, it's also a really difficult setup in here, so really high resistance, and it's definitely it's definitely easy to get caught up in here. Still, I really like the short, because I now knew, okay, we are reacting also to the price range right here is also really important. As you can see, from low to high, that's our expansion. We can see CE right here within the breakaway gap, and once we basically disrespect those quadrants, those levels, then we know we are not bullish anymore. We traded perfectly back to the high and sold off. That's also to the low right here, as you can see, and that's a immediate rebalance, and that's your fastest. I don't know how to call it. So superlative. That's your fastest reaction, and then you basically know, okay, we are definitely going to sell off. Added right here, and from there we really sold off, respected the inversion trail gap, traded lower. So actually now a market maker sell model is in play, aligned with the hourly chart. And what I did not really did well today was my two partials right here, I have to admit. So I could have trailed a limit order to CE or to the high time frame gap, also because we have our lower quadrant of our price range right here. But I did not, because I really wanted to see lower prices, and I wanted to see that we expand basically through it within our London close macro, and we failed to do that. I think my first partial could have been actually the high time frame gap, but my second partial is not really clean, I have to admit. So that was really kind of out of FOMO, because I knew, okay, I definitely missed out on taking my second partial right here as well, because with basically trading below the low, we want to take a partial. In that case, what I don't really like is the fact that we how barely traded below the wick right here. And also, if you take a look on ES, we can see that we traded really closely to the low right here. And therefore, I basically know, okay, we cannot leave such a triple bottom basically being staying intact. So therefore, I know, okay, we will see once more expansion to the downside, and that's what basically just kept me from taking a partial down here, because ES was just not sweeping the excess liquidity right here. But yeah, that was not really done well. Still, once again, it's also kind of difficult in here because we have such a high resistance delivery, and the market definitely makes sure that not many traders are in here with, or basically are in the short right here, and are allowed to participate in the run lower. But yeah, I'm completely content with my stop management above here, basically above CE of the high time frame gap. And then we finally saw our move to the downside after 11:30. So with lunch, we scrapped the excess liquidity down here and also created SMT with ES. So once again, unfortunately, ES is once again the leading index. NQ was a bit slower today. I would have liked to see that we come down and basically sweep the really relatively lows down here. Still, I'm completely content with getting out right here. So I'm up on the day. Definitely learned once again a lot. Still need to improve on position management, basically, to trade less, to be more patient. But today was definitely also done quite well. So yeah, I'm now actually able to to get a payout, so that's really interesting. But unfortunately for that, I have to wait for next week, basically, to be able to do that, and therefore I don't really know how I will continue trading. So because now it's a bit more stressful, because I know that I'm now able to take a payout, and if I maybe lose too much, I'm not able to do that. So I don't really know how we'll continue trading, but also yeah, I don't want to stop trading with only getting one payout. So I mean, in the future I will and I want to get more than only one, and for that I have to keep on trading, and I have to keep on follow my system to do that. So I don't really know why being able to get a payout should stop me from doing that, but it's definitely a more psychology factor. So I really have to see. What I try to focus on is only trading high quality conditions, and yeah, today actually was not high quality conditions, I have to admit. Once again, not a clean AM session, because we just really have high resistance. Our objective is already met, and we are only trading retracement, lower time frame market maker sell models aligned with the hourly chart, but not aligned with the daily chart. Yeah, but that's just it. I hope you learned something new. I hope you can also learn from my mistakes and also what I do right. So yeah, safe trading and enjoy your week.